Welcome. You have just entered the trading pit, your home for sophisticated takes on the crypto markets. It's March 21st, and here in the studio is JJ and Benjamin of J Labs. Welcome. I am your host, Marconi White. We're going to unpack the market, shrugging off the latest pullback. But first, it's rapid fire, where I want to hear these guys answer ridiculously simple answers to impossibly complex questions. All right, let's kick it off with you, Benjamin. Dogecoin futures, bullish or bearish? Ooh,
bullish.
Silence. What's that?
Bullish.
All right.
Bullish.
Okay. We start off. We know he's getting his dog tattoo. He's going to be in the tattoo parlor soon. All right, JJ. Solana meme mania. Does it end in 3 months, 6 months, or never?
That's a tough question to answer in one word. Just say never. Never.
Never. All right. Benjamin, I can give you $1,000 in Solar ETH. Which do you want?
Sol.
So, okay. I think you guys are forgetting this is rapid fire. All right, JJ, $1,000 in Solar Avalanche.
Sol.
Okay. All right. I like that. That was quick. Yeah, you get a gold star for that one. Last one here, Benjamin. AI or gaming?
AI.
Okay. All right. Well, you were kind of rapid on that, so I'm happy with that. Well, thanks everyone. I see a bunch of you in the chat. Glad to have you here. Let's kick it off with our first story, which is, of course, about the pullback. Now, just a week ago, Bitcoin was trading at its new all-time high. I think somewhere around 73K. This week, it touched 60K, striking a pullback across the market. Anthony Pompliano went on Bloomberg television. He called this a pullback for ants, adding, of course, confidence to the perma bull that this is just up only. JJ, I think the question on everyone's mind is the pullback for ants over, or are we going to be marching lower?
Well, you always have to be a little cautious when Pomp starts to get too proud, right?
That's right.
Maybe it's not over yet. But what we saw earlier in the week was obviously we hit a lot of technical support levels here. So you see the 50 RSI on the daily chart, as well as this lower Bollinger Band. And at the same time, we had this influx of increased short interest, which we covered on Tuesday. There was a whole lot of shorts piling in at the lows, and that just created this inevitability for the snapback effect, right? You had everybody de-risked ahead of FOMC, and then it was just basically status quo. There was no additional hikes signaled. So the market snapped back, and now we're really going to have to wait to see what the U.S. session holds today and into the end of the week to see if this momentum is going to be sustained to the upside. But for now, I'd still recommend some caution here. I'm not sold one way or the other that the bottom's definitively in or not. It seems like a short squeeze, and now let's see if they can carry that momentum to new highs.
Yeah, we did see some interesting buying. Obviously, like I said, I mean, Bitcoin went all the way to 60K. We saw some pushing all the way up. I think when I looked at it this morning, it was sitting about 67, so a pretty nice snapback. But yeah, so you're saying, listen, you want some more data. I know we're going to unpack that a little bit later, but I think the options data is giving us an ominous signal. And if we look at the ETF flows, they're not exactly giving a lot of confidence either.
Yep. And the biggest thing, too, is that this move happened during the liquid hours. So basically, as soon as the market closed, Bitcoin just full sent. In that window of opportunity where the U.S. sessions closed, you don't have a whole lot of sellers there. You can kind of push the price pretty easily. And they use that to squeeze out shorts that were over leveraged. It's a very simple play to run if you have enough asset under management to do so. And it seemed like that's what happened. And then we didn't really see follow through in the Asia session. I think it went to like 68K before Asia opened, and they just kind of fluttered around this range. So it's really going to be dependent on what the flows do during the New York session today to see if there's actual momentum there or if it was just a temporary squeeze.
Let's see if the New York Bulls can pull us through. All right, Benjamin, I want to ask you more about positioning and buying up assets, whether it's going to be Bitcoin, Ethereum, or the rest of the market. I was looking at Total 3 this morning, which, of course, is the crypto market minus BTC and ETH. It had a pullback about 8%. And I'm looking at the morning action across some of these assets. It's a bit of a mixed bag. I looked at something like Render. It had a steep correction. It's now back up. It's basically flat on 7 days, whereas something like Near is still about 17% down. So, open it up, unpack this for us. Where do you think the buying opportunities are right now if you're looking at this pullback and thinking it's close to the end? Is it going to be more in the majors like BTC and ETH? Is this something you can go a little bit further down the risk curve?
Since you mentioned about these AI tokens, I want to mention that we had the NVIDIA conference this week, and my hope was that just like every other CT influencer out there, that some of these AI tokens will catch some narratives as Nvidia starts to speak, and as the near co-founder basically speaks in the conference, and some things will pump. But basically, Bitcoin spoiled that party. And as a result, I believe the AI tokens pumping narrative for the short term, I think it's done. I don't think that is going to be the case. So I'm not so focused on near and those type of tokens. There's much better place to look at. For example, SUI, FTM, these are all projects that is having a good flow at the moment. So those are good to scalp. But during the dip, since we had a lot of ROSI alerts come in on OP, ARB, Arbitrum, and a couple of other tokens, I picked up some of them, and I'm still holding. Typically, when we get ROSI alerts, we just pick up these tokens piece by piece and just continue to hold, because it takes some consolidation before the effect of ROSI alerts purchasing comes into advantage. So this was one of those situations. In a bull run, you get very few ROSI alerts, ROSI bottom alerts. So I was using that to the advantage. But apart from that, I think it is still a bit of caution time.
Well, Benjamin, I guess I want to ask, you just mentioned SUI, Arbitrum. So was there any sectors that you saw from a ROSI alerts, if you looked kind of broad brush, was there anything related to maybe DeFi? You just mentioned AI didn't really get a push from
it was L2. So majority of the alerts that we were getting was in L2s. It was OP, Arbitrum. There was a little bit on LDO, but it was mainly L2s that we were getting a lot of signals.
I think that ETH announcement caused kind of a capitulation across the ecosystem there. So that makes a lot of sense.
Yeah.
Okay, so I think we have just right out of the gate, we got some caution from you two talking about the fact that we don't think this pullback is necessarily done. The pullback for ants, using Pomp's words, his words, not ours. You did see some buying opportunities, particularly in the L2 space. Some of these other narratives, not such yet. I wanted to unpack, because I know we had a lot of questions from the audience about the ETH ETF. So just to kind of replay the last couple of months, there's been a lot of discussion about ETH ETF coming out. I think the first decision is in May. The big decision is in August, and that's where BlackRock's approval or denial is placed. And there's been a lot of discussion on crypto Twitter about whether or not this ETH ETF has the room to run from a political perspective. And I think James Seifert, I'm sure I'm butchering his name. James, I apologize. Come on the show and correct me. He has very low odds. He's an ETF analyst. He has very low odds for an ETH ETF in 2024. But just last night, there was a subpoena for the ETH Foundation, receiving a subpoena for providing some information. Still unclear exactly what they were asking for. And then there's been a series of SEC losses. I think the latest one was coming from a Utah judge around DebtBox. And this was an article on, I believe it was Blockworks or CoinDesk, but they talked about the fact that the Utah judge imposed sanctions on the SEC for bad faith conduct and gross abuse of power that the commission had demonstrated in a case against DebtBox. So we don't necessarily have the ability to speculate fully on the ETH ETF. We don't have that information. But what I want to ask you two is the market pricing in a less than 5% chance of an ETH ETF in 2024? JJ, I'm going to start with you on that. Is the market pricing in an ETH ETF?
No, it's not priced in at all yet. If it was priced in, ETH would be well above all-time highs right now. So I think that is your window of opportunity. If you think that the ETH ETF is coming, is that there's still a lot of obviously disbelief, FUD in the market, and who knows how it's actually going to play out over the course of next year. But we do have some good signals, right? Like we saw earlier in the week, BlackRock's deploying over 100 million to the ETH ecosystem for DeFi, real world asset purposes and whatnot. So things are happening. And I think yesterday you saw that headline announcement, and the market's reaction to it told you everything you need to know. There was kind of a capitulation wick down, and then it bounced back up. So I'm not totally bearish on it. I think it's going to be a long legal fight similar to Bitcoin. Then the SEC is going to be dragged into it kicking and screaming. So it could take a while, but ultimately the longer this takes, the more your window of opportunity to accumulate ETH for the long term is. That's kind of the way I'm viewing it.
Okay, so the market isn't, from JJ's words, it doesn't appear that the market is pricing this in. Benjamin, I want to ask you the same question. Do you see any signals that the market is pricing in this ETF or not?
No, it's not priced in at all. I agree with JJ on everything that he said. And mainly Solana is spoiling the party for ETH. So even a lot of believers of ETH have been, like poached by the price action that Solana has seen, and it's going to take some time for them to go back from it. But I don't think the ETF will go through this year. At the very least, I think it will get delayed much longer. So we have to wait and see how that
This is
plays
something
out.
we were talking about before the show too. Is I think that's in BlackRock's best interest for it to take a little bit longer. Let Bitcoin run up. Let possibly the ETH BTC ratio fall down to 2020 levels, and really cause some capitulation in this pair. Like time-based capitulation on ETH is good for BlackRock. They can accumulate it cheaper. Let Bitcoin run up, and then when everybody's fully out of ETH, send it up only from there. But it's going to take some time.
Okay, so I think people are asking this question because I know we had some question from the audience before on Twitter or X asking about the ETF, why the FUD's coming out. I think the reality is that it isn't exactly the same conversation as we had with Bitcoin. I think there was an easier conversation about Bitcoin fitting in the commodity category. With ETH, it has a different history. It also has different properties, like the staking element, which is now being part of some of these filings. And in fact, for those who may have missed it, Grayscale just put out a notice saying that they want to include the staking capabilities for their ETH trust, which I think just, again, opens up the bag that this isn't exactly the exact same conversation as they had with Bitcoin. So I don't think the FUD is necessarily trying to be negative, perhaps just more reality. And the fact that you see this in the pricing is something to be aware of. Yeah. Okay, so let's move on to the rest of the market, because there's some really interesting data coming out. We've been talking about it around the ETF and the Perps options. All of it is giving some interesting signals. Before we do that, I want to say hello to Gabriel, Light Signatures, Adrian, Anton, Tyke, all the way from Finland. I've been to Hanko. It's a great place. JB, Adia, Hello World, Marge, James. Gosh, we got so many in here. Great to have you here. Definitely hit the like and subscribe button. What's that? Did I hear something? No,
it's a party. It's a party.
It's a party. It absolutely is a party. It's great to have you all here. Thanks for joining us here every Tuesday and Thursday. Definitely, as I said, hit the like and subscribe button and share this with as many people as possible that want a sophisticated take on the market from a bunch of serious avatars. Okay, so JJ, I'm going to kick it off to you. We've got some interesting signals coming in from the ETF. Now, for the first time, as far as I can tell, we've had 3 days of negative flows on the net. Most of that coming from Grayscale selling. We have 642 million, 443, and 386 million just on this week. And at the same time, we're seeing IBIT come down. It has an average of 272 million per day, but just on the last 2 days, just 75 million and 49 million. When you look at that, you look at we just had the sell-off. We start to look at some of the liquidations and perps. What's your take on this market? Are we starting to see some softness that's going to continue on? Finally see that 20% pullback?
I think we'll know by the end of the week how much of this was owed to FOMC de-risking, right? Like you obviously have Bitcoin making new all-time highs, a logical time to de-risk. You add on top of that the FOMC that happened this week, and there was a lot of reasons for people to take profit. So I think we'll find out if these outflows continue over the course of the next few days after we've had what's been widely regarded as a dovish FOMC. That's a red flag, right? Like if people continue to sell Bitcoin, even though it's below the all-time highs, and we have all of these headwinds that should send it higher, if price stops reacting to that and people stop buying it, that's kind of a signal that this rally might be due for a deeper pullback. So that's one thing I'm eyeing on. That said, if we want to pull up some liquidation charts here, we see just how much short interest got baked in over the course of the past few days. That said, there's obviously some long pools here too that we could hit if we wanted to return to the downside. But this is a whole lot of fuel for higher, potentially. These are 50x pools, I believe, or maybe, let me check that. These are actually 100x. So these are 100x liquidation pools that have entered within the past week. So you see there's a whole lot of liquidity back up at the all-time high levels. And these could get squeezed pretty quickly if those outflows turn back into inflows. Now that the potentially bearish headwind of the FOMC is behind us, you could see this narrative flip again, and we just send it right back to the highs. So definitely going to be a pivotal end to the week here.
Well, and I want to hit on that because I looked at some of the liquidation numbers. I saw 93 million in the last 24 hours. And I think the majority of that was shorts. And then if I look at the long short ratio for perpetuals, they're still about 58 to 42% long to short. And then I want to contrast that with what we're seeing on the max pain on the option side. So I think we're looking at this week closing out at 66K, but then next week, the max pain point's already at 50K. So walk us through for the audience, this perpetual market, where they're positioned. You talked about rocket fuel going up versus the way the options market is positioning and how that may play out and which may actually have a bigger play on where price may go in the next 2 weeks.
Yeah, that's interesting, right? Is that we saw that move to the downside. People were panic buying weekly puts, which we suggested against on Tuesday. Anytime something makes a 10% plus down move, you don't want to be chasing puts at the bottom because you'll get burned. That's exactly what we saw. Now prices gravitated basically exactly back to the max pain price for tonight's expiry. But then as you pointed out, if we go to the quarterly expiry next week, that max pain price falls a lot lower. And we still have a lot of open call interest here that's in the money and close to the money, like these 65,000 calls. If price reverses back to the lows, these could potentially expire worthless next week. So these people, it's over 5,400 BTC worth of open interest there. They're going to have to decide if they want to close these out and roll them to further out strikes. Say maybe you buy the June quarterly expiries deeper out of the money, or you just take profit on this position. Ultimately, I think we'll see that in the flows, what these people decide to do with their in the money positions, if they just take profit or if they roll it forward to further out of the money expiration dates. That'll kind of drive the market's momentum from here. So we'll see that betting come through the tape in the next couple of days as well.
So you're expecting the options market to have a bigger play than the perpetuals and that really to get wiped out?
It kind of plays off each other, right? Like if there's more, if these shorts stay open, there's that squeeze there. Then there's potential for option players to see that and say, hey, you know what? I'm going to buy some $75,000 calls for June, take profit on these 65,000s and let it roll. But if they just take their profits out and don't reposition themselves, if they wait for a dip lower, then we could be in for some downside turbulence next week to potentially new lows.
I think especially if we see these ETF flows continue to decline or show some weakness over the next week or two.
Yep, exactly that. It's all momentum, right? Like this whole way up has just been a momentum trade. So if that momentum stalls, you have to realize where you are in the map in terms of overall positioning and like a pullback to 50,000.
One more factor is dollar index, DXY. And yesterday we dumped as soon as the FOMC came out, but today we have almost recovered that entire candle. And this is partly probably due to the rate cut that Swiss bank suddenly introduced today, which basically caught a lot of people in panic, rate markets and currency people in panic. But the stocks, European stocks did perform quite fine. USD CHF basically went up real hard. And as a result, we are also seeing dollar index go up. So it has not reflected yet across other risk assets to lead to a correction, especially US stocks. But somewhat Bitcoin has been stalling here. And I'm not sure, but I would associate it a little bit due to this dollar index move as well.
Yeah, it is moving right back up today. Like we rejected a bit yesterday, but you see it's back above that 50 RSI mark. We look at the moving averages, basically above all of them now. The 200-day moving average is at 103.69. It's above the 50 and the 100-day as well. So it's getting that momentum back, which is a bit worrisome. So it lost that momentum, which just could have been a back test. And now it's preparing for the real breakout, which typically after FOMC, you see a lot of chop, right? Like it'll go one direction and then just whipsaw its way around. We'll see the real move manifest towards the end of this week into next. So a lot of be cautious.
Yeah, I want to come back and talk a little bit about the Dixie risks and the FOMC and now maybe what the market is anticipating. But I guess before we do that, let's talk a little bit about sort of the rolling. So we talked about the positioning that traditional market makers were making in the CME. Benjamin, you brought this up, I think, last week or the week before. Sort of watch out for the roll, and the roll needs to happen with some chop that we're expecting as we move from March into April. So knowing that the max pain point is sitting at about 50K, next expiry, so next Friday, and knowing that we have to see some of that rollover, or we're anticipating it. Benjamin, what kind of, I guess, reaction are you expecting from the market anticipating next week as more of the TradFi has to make that rollover?
So when I look into the CME data, right, asset managers are massively long, and they've been consistently long since quite some time. They still hold a lot of long positions, and leverage funds are massively short. So yeah, there's a mix of behavior out there, but asset managers are typically, quite good winners because they've been on a long only mode for quite some time. It's not just now, it's been like for years. They remain on a dip buying mode. They just keep accumulating, they build up and roll it over constantly. Whereas dealers, they're more degenerates. They play the local fluctuations, and I think that's where a lot of these hedging basically happens for these ETF purchases that keep spiking. And over the past few days, those shorts have been coming down slightly. It's still way higher compared to what dealer longs are. So I think there is a bit of activity that's happening. There's a bit of roll off on shorts. I think they're probably rolling over to the new contracts very soon. That's probably the activity that's happening. So I think it's still significant, but we need a few more weeks to see how far of a transition that has happened.
Do you see, that's good analysis. Do you see maybe some conflict between maybe the online or the on-chain people, or people working in the traditional crypto space versus TradFi, and where that pricing may have to work out itself out in the middle? Is TradFi just going to overwhelm it because volume is going to kick in, or does the, let's call it the traditional crypto markets, if that's even a term, are they going to be able to hold sway?
Traditional guys always will hold sway. They just know when to play their upper hand. They're not going to go against the TradFi flow and try to be the heroes. They're just going to let the TradFi, do the lead and basically make money out of it. So that's basically how they play. They look for weakness, they look for strength, get in, be happy about the positioning, and win out of it because they don't have to try and fight them. With that being said, I think basically right now we are still in chop mode. I don't think this is running up to 75K right away, like other Twitter influencers were posting around. We need more confidence, and at the very minimum, bare minimum, we need a daily close above 69,198. That was our previous cycle all-time high. At the very least, we need a daily close above it.
I like the specificity in that. Right? No range. Here's a number. Here's a target. If we don't get that, all bets are off. Okay, so for those out there, I think we had a comment from last week saying we were quite bearish. I think this is actually more of a nuanced discussion. It's not fully bearish, not fully bullish. We're sitting right now in this, maybe it's a no man's line. It's just kind of a gray area, and we're kind of waiting to see some stronger signals to suggest which direction we're going to go. Okay, I do want to move us into talk a little bit more about Dixie, about macro. We had a question here that came. Dixie seems to still be going up. Why is that? Is that because of JPY? It comes from Gabriella. Thank you. Or Gabriel. Thank you, Gabriel. So I do want to talk a little bit more about that. I know we touched on, but before we do, again, welcome to everybody here. Thanks for being here, joining us every Tuesday and Thursday to break down the markets. If you haven't already, like, subscribe, hit the button, share this with your mother, your brother, your little sister, your grandma, anybody who wants to hear a market take from a bunch of avatars. And if you're interested in doing the options trade, just like our hero JJ does here, be sure to check out CoinCall description the CoinCall link in the description. It's a great way to start your trade where you can do perps, you can do options, you can do spot of your favorite currencies. It's got a very elegant interface and very competitive fees. And best of all, if you want to be following along with exactly what JJ's doing, you're going to be able to see it like for like because it's the examples that he uses here, plus his options videos, which are an absolute smash hit. All right, let's get back into the markets. Yesterday, we had the FOMC, which felt like a lot more of the same. The plot map came out. We're still talking about some rate cuts, although it felt like it was, pushing it down, pushing the can down down the road, not really having to address it today, giving them a little bit of room if they have to make a decision not to do those cuts. And Ben has even talked about even raising rates, which I don't think the market would be ready for that just yet. But then we have the Dixie. And again, I think the question is, it's still going up. You guys talked about it a little bit earlier. What happens? What are we looking at here? We're still waiting for it to give us, I guess, some explosiveness, either up or down. JJ, I want you to kind of break this down. Have you seen this before in a way that makes you think, oh, we've seen this pattern. This is what I'm expecting. I don't know if it's going to go up or down, but we've been in this period before.
I just keep my eyes on this 50 RSI mark because you could see how crucial it is to determining trends. Like once it firmly recaptures it, it tends to send it up much higher. When it loses it, that kind of opens the gate for new lows there, right? So right now we're just back testing the area that we lost yesterday. It's trying to figure out, okay, was yesterday really as dovish or as friendly to markets as it was interpreted as? And I think we'll find out by the end of this week and ultimately into the end of the month. So I'm looking, if it has a weekly or daily close back above like 103.80, I think that's a red flag there, especially if that momentum continues into the end of the month. That said, if it falls back below 103.31, which is this trend line that it's kind of been following, you see this blue mark here. If it closes below there, I think that opens the gate to possibly fall back to the December lows. And obviously that's how we get a blow off top for Bitcoin in the coming months. So I still think it's at a pivotal inflection point. The market hasn't really made up its mind on it one way or the other. It seemed like the Fed capitulated a bit on their fight against inflation yesterday. In terms of Powell's comments, they're not actually targeting that 2% rate as a firm way of saying, hey, we're stopping only when there's 2% inflation, as they said they were in previous years. So there's a bit of capitulation there, which should weaken the dollar. And if it doesn't, that's a red flag, right? If there's every reason in the world for the dollar to go lower, it stops going lower. That's when you need to ask yourself, hey, what's actually happening here? Why are people de-risking at a time when they should be bullish? So that's kind of the way I think Dixie will ultimately provide that signal for us. So keep your eyes on it into the weekly close and monthly close here. I think risk off above 103.80 and risk on below 103.20.
All right, again, some specificity for anybody who's listening here. I do want to bring up this scenario. I think Michael Cowell, who's a macro analyst, we've talked about him previously on the show before. He's talked about this idea that other central banks were going to outdove the Fed. And so you have the Swiss central bank lowering rates. What if you start to see that from the European Central Bank, let's say from Japan? I think we're already seeing some very loose policy from China. Any expectation there? I know we don't traditionally go down that analyst route, but I just want to put that on the table, see if there's any perspective there.
Again, I think Dixie just tells you all you need to know. Like, I think you could spend a whole lot of time trying to figure out what these implications are for this, that, and the other. But ultimately, Dixie's up. If Dixie's up, risk off. Dixie's down, risk on. It tends to be that simple. So don't overcomplicate it by trying to read into all these narratives when the data is just staring you here in the face, right? Like you just see the clear relation between Bitcoin and Dixie. Let's just look at what happened yesterday, for example, right? Basically, the moment Dixie started to backslide here, it was almost perfectly Dixie top ticks and Bitcoin bounces straight up. And now we see Dixie rising, Bitcoin's falling down. You don't have to overthink it. It's actually incredibly simple, right? So just follow the Dixie's movements and you'll be safe over the long term.
All right. Okay. Well, so for anybody who's asking the more complex questions, I think JJ just gave you a big smack across the face and said, just look at the Dixie, stop asking questions.
Keep it simple, stupid.
Keep it simple, stupid. All right. Okay. Well,
on this point, I have something to add. This is something I was discussing with another Bloomberg analyst today in the afternoon. I was in a call with them, and what he was explaining is that typically in these cases, when other European countries are starting to lead the dovishness, US will not join the party immediately, because if they do, then there comes the problem of treasuries, right? They need buyers. They need those buyers, and now basically those treasuries basically become attractive for all these investors who are abroad, and that helps in the dollar getting a little stronger, and they want to capitalize on that. So they are going to be the last one to basically join the dovish party with respect to actually cutting down rates. So because I was also looking at some chat rooms and they were discussing like, hey, Swiss is cutting down and Japan and China and all these people are already doing stuff. So we're going to see US do it next quite very soon. And then when I spoke to this guy, he had this opinion like they won't rush to it because, like this is an opportunity for them in order to capitalize on the treasuries part, and they will take some time before they do the actual cuts. They probably could be the last to the party.
Mm-hmm.
All right. Well, if they are the last to party, it'll be interesting to see if we start to see some other cuts, if the Fed's able to kick the can down the road even into 2025. But as JJ just said, the tail of the tape is going to be in the Dixie, so we can monitor that and get a sense of whether the market is really going risk on or risk off. Yep. Okay. Well, I want to take us back into the crypto landscape and talk a little bit about positioning. Just to summarize where we're at here, both of you guys are still in the position in the camp that we don't really have a clear signal if we're going to see some more lower range, take us down to, let's say, the 50, below 60, maybe in the 50K range, or if we're going to be able to propel higher, maybe with some of the leverage coming in on the perpetuals. So I want to talk a little bit about positioning from that. Before I do, again, if you haven't already, hit the like and subscribe button. We'd love to have you here. Love to have as many people as possible to join us, because now we want to talk about trades and where people may enter. So, Benjamin, I want to talk to you about the alt markets. You talked, I joked a little bit at the beginning about Solar ETH. You said Solana, not ETH. You would take $1,000 in Solana. Unpack that. I mean, obviously, it's a bit cheeky to be asking the question, but realistically, would you be investing Solana right here over Ethereum? Oh, did we lose Benjamin?
I could take that one if you want, if he's not here.
Yeah, why don't you come to it?
I actually feel pretty strongly that the Sol ETH ratio is topped. Let me pull up the chart here. So we look at how overextended it's gotten, and it's basically just retesting the previous all-time high of 2022. We had this massive run-up, and I think you saw a lot of capitulation from ETH holders into Solana over the course of the past month or so. So you see this massive buy volume here. This is people exchanging their ETH for Sol, which sent it up. And now you see it kind of hit that perfect top ratio, basically right at that exact same spot it was in 2021. And now it's reversing. And I think you think of how much momentum it took for Sol to get here, all of that meme coin mania, et cetera. Like, how long can this sustain itself over ETH? I think we're kind of at the very tail end of that. I think a lot of it's already priced in. The long Sol short ETH trade got extremely overcrowded and overpopular this week. Over the past month, really, as you had people longing Sol on perpetual, shorting ETH. It was a great trade, but I think it's run its course here, and we're going to see it reverse over the course of the next few months. Even if that is the entire market going down, I expect ETH to go down less than Sol. I think if the market makes a recovery from here, I actually think that ETH will outperform Sol from this point. So I would bearish Sol versus ETH for sure.
Okay. I would say counter to what we're seeing in the market, especially with some of the volume of communication on Twitter.
That's exactly it. The top signals everywhere for this ratio this week, right? Like, it was funny. The memes are great in terms of people memeing ETH's underperformance to Sol, but it's not going to last forever. And be aware of it. The trade's run its course. If you were in it, great trade. I'm not saying to risk it all, but just be aware that these things reverse. They find the mean over time. And I think it's due for a deep pullback here in the coming months.
Benjamin, are you back?
Sorry, I muted by mistake.
you
I was
want to give your
checking my
second,
mic. Why is it not working?
Yeah. All right.
No,
So you just heard JJ break down the ETH Sol chart, making the case that Solana has seen its day in the sun, and now we're going to see a bit of a pullback. Ethereum is going to outperform it in the near term. What's your perspective?
It's true. What he said, everything is absolutely 100% right. The only difference is that my investment into Solana would be to go to the meme coin mania and double it within the next 45 minutes.
So you're just full on degen.
There's still money to be made on it for sure. I'm not saying that.
That's the point. That's the reason to go into Solana. Or if you have a solid project idea, let's say you want to build something like a Farcaster, or let's say like a Dialect, or you want to build a good DEX, Solana is good for all those things. I mean, you can really build good utility products over there, which will eventually gather some momentum. Maybe you want to build a gambling product. Those things all will do fine because of the cheap cost when it comes to transactions. But I don't think it will be a proper financial layer like what ETH is. So let's say you want to build a staking product, or what the native staking advantage that ETH provides, the network effect it has. You can't beat that. It will take quite some time for that to happen on Solana or any other L1 for that matter. I mean, L1s have come in and gone for a long time, right? The problem with ETH, why people are pissed, including me, is because of the huge cost and everything moving to layer 2s. And probably it's going to be like Base versus Solana rather than ETH versus Solana, if I think about it. Nobody is deploying meme coins on ETH because it's doing well on Solana. They're deploying it on Base because it's cheaper to do it, and you can pump it for much cheaper rates. You can rug pull it for much cheaper rates. You'll find people coming in for much cheaper rates because everybody still believes eventually there will be a Base token. So it's worth it if I go and trade on Base, because someday maybe Coinbase gives me an airdrop. And I'm betting huge on the degenerate mindset, because Coinbase will definitely push that to happen, because every fee that they collect from the Base protocol basically adds up to their book balance, which in turn pumps their stock price. They don't even need to launch a Base token, but the degenerates don't care about it.
So,
right?
Benjamin, just to be clear, I mean, this is a very high speculation on whether or not Coinbase could do a airdrop, because I would think that as a registered SEC and having more, being the brand that they are, they're going to have the SEC breathing down their neck. Doing an airdrop that could raise some red flags. No,
100%. This is what someone with 100 plus IQ think, but that's not the market we are in.
Yep. You have to shut your brain off sometimes. That's true. And you never know. Like, maybe these things change for the better. Maybe the SEC.
I mean, maybe Coinbase finds a way to issue a SEC compliant token. Who are us to stop that?
Yeah, right.
Yeah, there's ways.
SEC. All that SEC wants is to follow compliance. They want you to go and register with them, right? And if Base is probably going to have a fully diluted valuation and comes up with a token where there is no pre-sale, there is no initial investors, nothing. All those things that basically SEC calls as a security. Who are we to say that they cannot come up with the token with that as a base? Maybe
you could also make the argument that Armstrong is interested in trying to push those boundaries. And so, to your point, if they created a SEC compliant something that walks to the line but doesn't cross it, they could just put it out there to say, hey, we did it all correctly. Look, the SEC is overreaching. Therefore, this is just another example, and they need to be reined in.
It's also not just Armstrong. It's everybody who owns Coinbase. There's a lot of institutional ownership. There's a whole lot of shared interest among powerful people with a lot of money that want to see these things maximized. And I think the SEC is kind of a defeated foe. So just shut your brain off from those headlines. Don't let them scare you out of position. Like Larry Fink's deploying 100 million onto ETH. Do you think he cares about whatever this nonsense headline that came out about it being?
But that is a stable coin yield, though. It's using the ETH ecosystem, but it's about a stable coin approach. You get a yield-based approach.
All right. So I want to summarize these points here. So the ETH Sol trade, JJ is arguing, has seen its day. It's going to see some capitulation. I don't think it's escalator on the way down, but definitely it's going to struggle here. Benjamin, you're arguing that on the meme side, there's still an opportunity for you to make the money, make the cheese.
Yes.
Yeah? Okay. All right. So outside of Solana, anything else? You mentioned the ROSI, mentioned the layer 2. Anything else, Benjamin, that's kind of striking, but I guess is on your radar of interest?
I am looking into a token, but I need to finish the research to share about it. But I feel it is highly undervalued. It's a token that has already done 100x and retraced all of it, but the economics makes crazy sense to me, and it's going to probably get me a lot of backlash if I talk about it. But that is a 100x opportunity I could think of.
Benjamin, we've never talked about Ripple on this show. We're not going to do it today.
No, Ripple is going to $100 trillion valuation. Come on.
I have to laugh because
Ripple
whenever
ETF,
I get
baby.
whenever I get somebody asking me about crypto and it's Ripple, I just go, okay, where did you hear this information? And I'm not even knocking. I mean, I'm sure people have made some great money on Ripple.
Yeah.
Look, I'm still fine with Ripple, but when people talk to me about Cardano and say that, hey, do you know Haskell programming? I'm like, screw you.
You can tell me it's going to go up, just don't tell me it has fundamental value. And
There we go. Okay. All right. Well, Benjamin, we had a comment here saying we want more Benjamin good insights from Azim. Thank you, Azim. So we'll definitely have to bring you back. We'll have to talk about this token here. Not that we're shills, but definitely if there's some good opportunities, I think people want to know. Okay. So JJ, I want to talk a little bit more about the options market. If you're seeing any trades there, and for anybody out there, if you haven't already, definitely check out the link in the description to go to CoinCall. See if you want to sign up for an account where you can trade these options. You can follow along every Tuesday and Thursday where JJ's breaking this down, as well as in his options videos where he's going over strategies of how to think about the market, its rotation, and how to position yourself with longs or shorts, whatever it makes sense to do in the moment. And again, CoinCall, elegant interface, competitive fees. It's the place to do it. JJ, are you seeing something right now? We've talked just last week. We talked about the fact that buying puts or buying downside coverage was too expensive in the moment. It was going to be easier just to keep the cash on the sidelines. And then we saw a couple of long opportunities that weren't really that strong. So what are you seeing right now? Is there a position that you have a little bit more conviction in?
yeah, so we saw those weekly calls shoot up. There was a ton of buying in them. So if you bought anything above 65,000 or so, now it's in the money. You've probably made a nice 3 to 4x on that over the course of the past couple of days. I would suggest closing that out if you are long into the weekly options expiry here this week. And if we look at next week, those puts we were looking at and saying they were too expensive on Tuesday after the crash, now you just see how quickly these options prices fluctuate. So these 60,000 puts expiring next Friday, I think they were around like 3,400 or so on Tuesday. Now you could buy them for 600. And I think your invalidation is so close here. If you see Bitcoin get back above 68,000 in the New York session today or tomorrow, you could cut these for a small loss. But if you buy them here, it's a great hedge to have in place in case we do see lower lows and ultimately that sub 60K candle come in over the course of the next couple of days. If this short squeeze is over, it gets a nice reversal. You could see these go back up to $3,000-$4,000 a piece at a very small risk premium here. So I think this is a good trade to place here for today. 60,000 puts, March 29th.
Okay. All right. Well, guys, if you have questions, definitely be looking to hit up JJ on X. And check out those options videos. And I know, JJ, you're working on the next one as we speak. So more good content to come out to, again, continue to explain the strategies and thinking as we head into the market. All right. With that, we are going to wrap up today's show. Thanks. I want to thank Benjamin and JJ for dropping the alpha. I want to thank everyone who joined us. Really appreciate you being here. I'm going to get my standard PSA. As we're looking at Bitcoin, I think it's trading, last I looked, about 67K. Looking strong. No, it's a little bit lower, 66. But as I said, with my PSA, keep some dry powder. We don't know if we're going up or down from here. No one knows. It's all law of probabilities. And you want to be positioned to take advantage. And with that, this is Marconi White signing off.